Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangl.
Welcome to episode number 37 of the Monday Money Tip Podcast. Woo. It is Monday morning. Get fired up. And I am joined by my name is Joe Sangl, by the way, and I am a co-host of the Monday Money Tip Podcast. And I am super excited that my co-host, Megan Hibbard, has joined us today. Are you fired up on this Monday?
Fired up.
Yes.
We are talking about investing today.
Yes, this is a great topic. I know that we've been talking in the past couple of weeks about debt reduction and budgeting and those sort of things. Mm-hmm. So it's good to talk about growing our money.
Yeah.
And so that's going to be a great topic.
Yep. So our featured question for today is, Joe talks a lot about saving and investing, and I'm very interested to learn more. Can you share more about how you diversify your investments and what you're currently invested in?
Yes.
So it's
happy to
that
do that
time of the year that we share that.
Oh, man, it's so great. It is the month of March, and this is when I like to look at all my investments. And many years ago, I don't even know how many years in a row this has been, maybe 10 or more, I started publishing what I'm invested in, literally, the actual investments I have. And if they're publicly traded, I list the ticker symbols. And so you can just Google Joe's current investments. We'll provide a link to it as well. And I do not offer investing advice for individual investments, but I provide it because I know it's a hugely confusing topic for people.
Right.
And I provide it as a starting place. They've worked well for me. I spent some time today actually looking at the investments, and it's just been unbelievable to see what has happened. So we'll talk about that in a minute. But before we get to the main topic, it is that very special time of this podcast where we talk about that special time. You know what time it is, Megan. What is it? Let's go.
Now it's time to get caught up with our current money events.
Today's Monday Money Tip Podcast is brought to you by I Was Broke, Now I'm Not. Their saving and investing tools are designed to help you make more informed decisions, whether you are wanting to know what your investment strategy will produce for you by retirement age or determine how much you should save for each paycheck for known upcoming non-monthly expenses like Christmas, vacation, and car repairs. You will find the calculator you need at www.iwbnin.com. Click on Tools and Saving and Investing.
That's awesome. And I love being able to talk about investing. It's one of my favorite topics. Obviously, we talk in my book, Oxen, which you can find more about at oxenbook.com or at iwbnin.com. Click on store, or you can find the book Oxen at the local Amazon dealer near you. It's awesome. Free 2-day shipping with Prime. But here's what we like to talk about when it comes to investing is the stock market. It is one of the great places that people invest, and people are always interested in what's happening with the stock market. And we've decided right now in the Monday Money Tip to update people on where the stock market is on a monthly basis.
Yes.
Isn't that awesome?
It changes so frequently.
And so you need to know that we record these a little bit in advance, and
because your schedule is slightly crazy.
So we don't release it like same day. So the numbers will be different as of the day you're listening to this podcast.
Right.
But when we're recording this right now, let's update everybody on where the Dow Jones Industrial Average is. Share where that's at, Megan.
Yep. It is 25,500.66.
That's awesome.
Yep.
So over 25,000 points. That's fantastic.
Yep.
And tell everybody where the NASDAQ is at now.
Yep. 7,439.80.
That's awesome. And the S&P 500 index fund?
2,751.55.
That's great. And talk about the Russell 2000.
The Russell 2000 sounds like a vacuum cleaner or something. I don't know. It could be a product. 1,548.26.
Okay. So this is interesting because I like to share each of these and then kind of say where we've went since the last time we updated it.
Yeah.
Last time I updated it was episode number 33, which released on February 18th. And the last time that we recorded for that episode, the Dow Jones Industrial Average was not 25,500 points. It was 25,098 points. So it's went up about 400 points.
Okay.
It's almost 2%. That's really good. NASDAQ has went up from 73.29 to 74.39. So that's over 100 points. And the S&P 500, which stands for Standard & Poor's, it's 500 American companies. It's an index. It's a real good indicator of the overall American economy. It's went up from 2714 to 2751. And the Russell 2000 has went from 1512 to 1548. And so all four indexes are up. The Russell 2000 is a collection of 2,000 publicly traded companies. So the markets are up. And one thing that we know in the short term, markets are up and down. Just so happens this time it's up. I am not a day trader. Are you a day trader?
I can't do it. Nope.
Which means buy, sell stock, and then sell it within a few weeks. I don't know how to do that.
Yeah.
And most of our listeners don't pay attention to this on a regular basis.
I don't have time.
You don't have time for this.
I don't have time for that.
Yeah.
I'm working during the day.
But I have time for that. I pay attention to it for you. So this is Joe Sangl, your money coach, at your service, at your beck and call, particularly on every Monday as a Monday tip. But here's what I want you to know. Especially if you're one of the people who gets your statement, your investing statement, and you throw it just in the corner, you don't even open the envelope. There's people that do that. A lot of people.
Yeah.
You're nodding your head right now, driving your car, and you know you're one of those people. You get your statement from Fidelity, from Vanguard, from American Funds, from Edward Jones, from Ameriprise, whoever your investment provider is, JP Morgan, whoever it is, and you just like off into the corner, off into the corner. You've got like several years of unopened. Yeah, it does. It does. It makes that sound. It does. And so Joe Sangl, in your current money events section, is encouraging you to pay attention to this podcast because on a monthly basis right now, we'll update you on what's happening in the stock market. Why would we do that if we don't want to be day trading? Well, we want to do that because it's important to pay attention to it. And from time to time, you may need to make adjustments,
right?
Particularly as you're approaching the need to use that money. We've talked about episodes on when you should move money around. We'll talk about it in some upcoming segments as well. But I do want to tell you this. Over the long term, there's been few investments that have done quite as well as investing in companies around the world, both internationally and domestically within the U.S. So pay attention to it. We, at your service, once a month, will provide you updates. You're welcome. That's it for today's current money events section.
Okay, for our success story today, back in January, we shared a story from a woman who had previously used overdraft to make it from month to month and started budgeting in November of 2018. And then we received this follow-up from her. So we wanted to share that. So that's pretty cool. So this is from Debbie. And Debbie said, we attended the FLE at New Hope in Garner last fall. I started budgeting in November, December after participating in the course. I heard it would happen, and last week it did. I forgot it was payday. And
Yes.
Overdraft is a thing of the past. Thanks for everything, and I love the podcast.
Listen, that should be the theme of this Monday Money Tip.
Yeah.
Forgetting it's payday. Is payday important? Absolutely. But when you forget it's payday, that means you're winning. It means you have margin in your life. You're able to look at things in longer term perspectives. You get better deals. You have less stress in your life. Congrats, Debbie. Thanks for the update. We love hearing your success stories. Please send them to us at info@iwbnin.com. We love to celebrate with you your success. That's why we exist, is to help you be successful and to help you forget when it's payday.
Perfect. Okay, so today we're going to dive right in. And our question for today is, can you share more about how you diversify your investments? So let's start with that one.
Yes. So I remember at the outset, the question was that Joe talks a lot about saving and investing, and I'm very interested to learn more. I just want to start by saying there's a difference between saving and investing. We've talked about this in previous episodes.
Yes.
Saving is for safekeeping. We don't really want it to grow too much. It's there for protection. It's margin for us. Investing is where we're putting it at some level of risk and expecting it to produce more income for us, more money for us, for it to grow. So today we're going to talk about that investing side. Taking some risk, yes, but taking risk so that our money will grow. So to answer the question, there's two distinct questions. One is, I'm French now. How do I approach diversification of investments? And the second question is, what investments do I currently hold? The first one is, how do I approach diversification of investments? Well, that's a great question. And I'll just share a couple things of my approach. So can I do a couple of like disclaimers?
Do it.
Disclaimer alert. It's awesome. That should be in every episode from now on. My disclaimer alert from Joe Sangl is that this works for Joe and Jen Sangl. This may or may not work for you. I am not a registered advisor. I'm not a member of the SIPC. I am not bound by the SEC. But I will tell you this has worked for me. I'm a poet. My feet show it. They are Longfellows. That is awesome. All right, so here's the deal. I want to talk about diversification investments. And meanwhile, my co-host is rolling her eyes, which you can see on.
There's no rolling the eyes. There's laughter and confusion about the last joke you made.
Okay, confusion. Henry Wadsworth Longfellow. Get it? Poet.
Yeah.
Rhymed. Anyhow, it's bad when you have to explain your jokes, but it's wildly important to have more than one investment vehicle, a diverse group. And because this is important because you would like to have multiple streams of income. If you have only one stream of income and it dries up, how many streams of income are you left with, Megan?
Zero.
You
in trouble.
Yeah, so we can do math here. Megan has obviously had advanced math classes. She did the math that if you have one and it dries up, you're left with none. Those
Zero.
rhyme too. This could be the rhyming episode.
Okay.
But here's what I would encourage everybody to do is to target 3 streams of income from a minimum of 3 different unrelated areas. That's Joe Sangl's approach to diversification. Now, obviously, the more streams you have, the better. And some people say, well, this one stream, it produces $20 a month for me. Whoop-de-doo. I say, whoop-de-doo. If you don't like it, send the $20 a month to me. I will take any and all streams. If you notice, to get a raging river, there's little tiny streams that trickle in there. There's big rivers that stream. Listen, I'll take any and all streams as long as the word positive cash flow is related to them.
I will take them as well.
Yes, that's right. And so let me list some that are really good. One is dividend-paying stocks. These are companies that are returning profits to the shareholders. Dividend-paying stocks. Many dividend-paying stocks are paying 3% or more based on the value of the stock right now. So when I update my investments, you'll see that I own some dividend-paying stocks. It's a great stream of income. And the second one is retirement accounts. So this can be mutual funds, ETFs, index funds that are within the bounds of a 401k, 403b, 457, TSP, SEP IRA, SEP IRA, any type of Roth IRA. Or if you're in Canada, my Canadian friends, they've simplified it. They just have an RSP, a retirement savings plan.
So much easier.
Or a tax-free savings plan. It's tax advantaged, and it produces income through growth and through dividends. And a third one is pensions. Many people have a defined pension benefit. They've served in the military and they retired. They work for the government. They have a pension. They have a pension from their place of employment. It can be a great stream of income. A fourth one is the government pension called Social Security. If you have not opened your account and you're a U.S. citizen paying taxes, you should pull up and create your account at ssa.gov. ssa.gov, even if you're in your 30s, even if you're in your 40s, if you're in your 20s, you should open your account. It allows you to track your income and expected return. Have you done this, Megan?
I didn't. No, I haven't. I didn't know about that.
So after this episode, Megan Hibbard will be pulling up her account at ssa.gov and will be determining what her benefits are. And she will encourage her husband, Jordan, to do the same. Is that right?
Yes.
Does Berkeley pay taxes?
No.
No. Okay, well, Berkeley the dog at the Hibbard household does not. But very soon, there will be an addition to the family. In fact, when this episode airs, you're probably going to be holding your little boy.
I hope so.
It'll be awesome. He'll be issued a Social Security number.
Yes.
And he will go on the books. And that will be, again, his 67-year journey to retirement. Get fired up. That's called vision. Another stream of income could be a small business, full or part ownership of a small business. Another one could be a franchise. Another great one can be real estate, where you get rents from that real estate. And another one can be precious metals. I really like the type that looks like a mirror when I look at it. It's awesome. But here's what I've chosen to focus on. I've chosen myself to focus on 4 categories. Social Security, retirement accounts, my 401k, simple IRA type of accounts, I've also used my health savings account as a retirement vehicle because at age 65, a health savings account is no longer required to be used for health care, which is great. I can use it for anything. And it is not subject to required minimum distributions at age 70 and a half, like a 401k or a regular IRA are subject to. So I use Social Security, retirement investments. My third one is real estate. I love real estate. And my fourth one is small businesses. So small businesses, of which the Monday Money Tip is a part of one.
Yes.
Isn't that awesome?
Thank you.
The Monday Money Tip makes extraordinary levels of income for us. It's amazing since it's sponsored by I Was Broke, Now I'm Not. It is awesome. In fact, we don't know that it's produced one single dollar of revenue yet.
You cannot
but just
say
wait.
that.
We are going worldwide with this podcast.
I need you to be more optimistic.
I am optimistic. I'm positive. Positive as a proton that it has made no money for us. That's so funny. Anyhow, I crack myself up. Isn't that awesome?
But we are helping people.
That's why we do this. We are able to do this because we make profit with other things through the selling of our books and resources, budget challenge, things like that. And that allows us to do this to help so many people. And it's a wonderful thing.
That's right.
So diversification of investments. That's why I do that. So here's your walkway points. 3 streams of income. Target them. In your mind right now, think, how many do you have? Do you have Social Security? Do you have pension? Do you have a retirement account? Do you have a small business? What are your streams of income right now? All right. The next question is what?
The next question is, what investments do you currently hold?
That's great. And I release my investments every year in my Joe Sangl's current investments report, which is being released in concert with this podcast episode.
In concert?
Yeah, in concert with, which means in participation with or in coordination with.
Oh, snazzy.
So the link is being provided, guess where?
In the show notes.
That's right. So just click the show notes and you'll get your very own copy of Joe Sangl's current investments. I also share my prognostications of the marketplace and what we might experience over the upcoming year. And I also review my prognostications from the previous year and see just how wrong I was.
What a word.
So it's great. I love prognostication. It's great. It's what the groundhog does on February 2nd.
You guys just need to try to work that into your conversations today.
That's right. The word of the day is prognosticate. Perfect. If you can spell it, that's a good start. But I also, I own all these investments, and I will share that my real estate is primarily raw land. Mm-hmm. It's both agricultural land where I'm growing trees and deer and other things, like food plots for deer and turkey and things like that. And then I have commercial property as well where we may build our offices one day. That's been my approach for now. Yeah. Stand by. We are interested in rentals, primarily multi-unit rental properties. The third category is real estate for me. It's small business. Okay. So I love small business. I have ownership interest in several small businesses ranging from $150,000 in annual revenue to several million a year in annual revenue. And they all are fun and they all have challenges and they can all drive me crazy at different levels of the day. But they're awesome, just like any investment. They require more active participation than my mutual fund investments, which is my third type, which is retirement accounts. So I like to maximize my contributions every year, and we attempt to put the maximum in each year. Based on the type of retirement account you're investing in, you can put a different amount in there. We have a simple IRA at our place of employment. You can contribute $12,500 to that. A 401k allows you to contribute more, upwards of $18,000 a year. And if you look at your Roth IRA and regular IRA, that's limited somewhere around, depending on the year that you're listening to this, around $6,000, $6,500 a year per person in your family. So that's what I invest in. And you'll see the individual stocks that I hold as well. My general principle is to hold these investments for at least a year, primarily 10 years or longer. Many of the investments that I possess today, I have held since I was 24 years old.
Wow.
So I've had them for 21 years. And I'm a buy and hold type person. So there's different types of investors. There's those that get in, fix it, sell it. There's others that get in and get out really fast. That's day trading. There's others that are buy and hold. Warren Buffett, the Oracle of Omaha, the owner of Berkshire Hathaway, and they own they own great things like John Mansville Insulation, Choretime Brock Feeding Systems, Hellsberg Diamonds, Geico Insurance, Pampered Chef. They own half interest of Burger King, Tim Hortons, and things like that. They own a lot of different Kraft Heinz ketchup. They own Burlington Northern Santa Fe Railroad BNSF. He is a buy and hold forever type guy. And that's kind of who I model myself after in a very small scale of his billions of dollars.
He's doing okay. All right. So our helpful tool today is the net worth calculator, and you can find that on our website. We'll also include a link in the show notes as well. So you recommend people do this once a year?
Yeah, I recommend you review your investments at least once a year.
Yeah.
I update my net worth every month.
Every month.
In the months where the market is down, it's like hold my nose and do it just because of its obligation.
Yeah.
On the good months, I can't wait to do that.
Yeah. Okay, and our key financial quote today is it's from you, Shucker. How's it going? I like when they're from you because
Are you mocking me?
No. Because usually I've heard them because you like to say them a lot. But the Bible says in 2 Corinthians 9:6 that if you sow generously, you will reap generously. If you sow sparingly, you will reap sparingly. But what if you sow nothing at all? I suspect you will reap nothing at all.
So here's the deal. That's the truth. And I don't know what your feelings are on the Bible, but I'm telling you right now, when I apply it to my life, it just works better.
Yeah.
And if you sow generously, you will reap generously. I learned this as a son of a hobby farmer. I've learned this as a person who's farming a little bit now. If I put a lot of seed in the ground, I get a tremendous harvest. If I put a little bit of seed in the ground, not so much of a harvest, a little bit. Yeah. I sow nothing, I'm guaranteed to get nothing. I want you to be an investor. So hopefully this podcast episode has helped you understand a little bit of the insight into why I invest the way I do, my approach to diversification. You got to find out what's right for you. At the end of the day, it's got to be right for you. Real estate isn't right for everybody. Investing in the stock market isn't right for everybody. But you've got to invest somewhere because there is a risk called inflation that devalues your money year after year. And if you don't take any risk to grow your money, you will end up maybe saving some money, but it will buy less and less every single year. So I encourage you to make sure that you have a strategy laid out for yourself, learn about this stuff, keep listening to the Monday Money Tip podcast, reading materials, going to investing workshops, get yourself really equipped to be a great investor because it is what will fund your long-term dreams.
Perfect. Okay. The last couple episodes we haven't had time to do the hot seat because we've talked a little bit.
My seat warming up.
So maybe we do them like super quick.
Okay, let's go.
Okay, so
it's a hot seat.
Oh, gosh.
Now.
Number 1, what dish would you bring to a potluck?
Oh, this is easy. Church potatoes.
What are church potatoes?
Church potatoes are awesome. They're like little cube potatoes, and they're seasoned, and they have cheese all over them, and then they're topped with like cornflakes. They're absolutely spectacular. In fact, it was really hilarious. We were at a Cub Scout potluck recently, and we brought those because we love them, and we hadn't had them in a while. And this couple that was there, they're Mormons from Salt Lake City, and they're like, "Oh my goodness, who made these?" And they saw we had made them, and they're like, "What do you call these?" And I said, "We call them church potatoes." And they said, "That's hilarious because in Salt Lake City, we all call them funeral potatoes because everybody always shows up at the funeral with them." And I'm like, well, okay, they're church funeral potatoes now. And it was hilarious. And so it's just funny how that type of thing shows up at a potluck all the time.
Yeah. And
they all get eaten all the time. It was delicious.
That's awesome. All right. What is something you want to do before you're 50?
Before I'm 50?
You don't got a whole lot of time.
Man, I'll tell you what, what are you calling me old? I'm old. I got 5 years before I get to 50.
You have less years than I have.
Oh, that's unbelievable. She just called me old. That's it. Next week, we'll be introducing a new co-host of the Monday Money Tip podcast.
I just said you weren't far. You weren't far from 50.
Woo. That is negative pay raises. We're going to have negative savings rates and negative pay raises. Awesome. Something I want to do before I'm 50. I want to make it to 49 and 364 days. That's one thing I want to do before I'm 50. And the other thing that I would like to do, I took my older daughter on a bunch of trips, because she was our only child, and we had 10 years with no other children.
Yeah.
And we went on all these trips, and I, in my head, had checkmarked that I'd went to all these places, and I realized that all my 2 younger children that God sent us, our little son, our little daughter, who are, as of the recording of this podcast, 9 and 5, they haven't went to any of those places.
Oh.
So I want to go back to them. So the Badlands, Jackson Hole, Yellowstone, California, Seattle, and the Olympic Mountain Range. And then I want to take my son fishing in Canada. I want to take my little daughter fishing in Canada when she's a little bit older. I want to do all those trips again. You'll notice all of them are related to travel. All of them related to outdoors, generally getting away from people. It'll be awesome. I love it. I love exploring the creation of the world.
All right. So on our
Hey,
next...
I want to ask one question of you.
Oh.
Yeah, if you want to turn around a hot seat for you, what dish would you bring to a potluck?
I was thinking maybe like pregnancy hormones. You think of like, start thinking of food and you just go on a rabbit trail of every food you want to eat at the moment. But my husband makes a really good like buffalo chicken dip.
Oh,
So
love it.
Yeah, I would that
With Frank's red hot sauce?
some kind
Please
of red
tell me
hot
it's
sauce.
Frank's.
I don't know.
Now-
Whatever Aldi had.
So we're going to finish the podcast now because I'm going to call Jordan and ask him to make it for me right now.
It was
that
really
sounds
good.
amazing. Awesome. Well, thanks so much for joining us today. Give everybody a preview of our next episode, which will be episode number 38, if you can believe
Yeah.
it.
Our next episode is going to be the last episode of the month. So we're going to be answering your money questions. So if you have questions you want us to answer, make sure you send those in to info@iwbnin.com, and we'll be answering those. And if you like today's episode, please help us get this podcast to others who could benefit. You could do this by quickly rating our podcast and leaving us a review. These ratings and reviews help us make our podcast better for other listeners. And if you implemented one of our tips or you want to share a success story with us, make sure you email us as well at info@iwbnin.com.
That's awesome. As we finish today's episode, I want to encourage you, if you have not been investing anything, remember what that will allow you to harvest. I encourage you to take one step today. Open an investment account. If you have not done so already, you can go to our next steps area, click on investing. You can see who we recommend. I'll just mention on this episode, schwab.com. Mm-hmm. Open a basic trading account. If it's for retirement, put it within a Roth IRA and transfer some money there. It does not matter how much. If it's $50, $25, $150, whatever you can get in there, and invest in something. Because even if it's sparing, at least you'll get a sparing harvest. It'll cause you to learn about it, and you will gain confidence in this area that many people lack confidence in. You'll become a tremendous investor. And who knows, you may just be a guest on the Money Tip podcast talking about your investing success. Until next week, make progress. We'll see you 7 days from now to help you with all of your questions that you've sent in through the week. Get fired up.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.